A couple of notes before I begin this week. Note number one is about the sound. I'm in Costa Rica. I have my laptop with me. I did bring my Blue Snowball microphone down, but my laptop doesn't have a USB port, and the Blue Snowball uses USB. So I'm using internal microphone on the laptop. If the sound isn't the best, well, that's what it is. Number two, I know that some people have expressed concern about how many times I mentioned that guy's name. But if you were in the markets last week, all the volatility was the result of one guy. Nothing else happened. I have a bunch of people down here in Costa Rica, and as we were working our way through the markets, things would be going along fine. Then these big red bars down, and almost everybody here is, what did he say now? That one name, that one guy, you know who it is. I cannot talk about markets without talking about that guy, and I can't say, much like the Fed, here's the date on which we should pay attention to, here are the risk events. Every minute of the day is a risk event because you never know when that guy's going to speak. So if you are triggered by his name in the sense of you think I have a derangement syndrome because I keep mentioning him, trigger warning, I'm going to be mentioning him. You can't avoid it. So if you're sensitive to it, you may want to stop here and look for something more pro-Trump because we're talking about the markets, and he is a negative influence on the markets, on price. He is a positive influence on volatility. So if you are a volatility trader, this guy's a wonderful gift. If you are a directional trader, if you are an investor, this guy's just horrible for you. Let's see where we were this week. The story is growing nicely in the bond story, and I think 2025 is going to be a bond year, more so than an equity year. Money market, all the way up to the 3-month, I don't think we're going to really pay attention to because no one's expecting much to happen in March. The 1 year down 7 basis points. When you get to the capital market curve, look at the drop in yields. Look at the 10-year down 18 to 4.24. Not 3-4 weeks ago, sitting at 4.9, and you heard some forecasts of we're going to a 6% 10-year, which I didn't think was realistic, given that the slope of the curve would be so steep that it would bring trades in that would lower the 10-year anyways. But here's the problem. You got a 4.24 10-year and a 4.32 3-year. Look at what you have on the 3-month. To the 10-year, we have a new inversion, a double inversion, which is extremely rare to happen. Now, you could argue that the uninversion under normal times never would have happened. The reason the uninversion happened is as the Fed was cutting rates, the narrative turned to the unsustainability of the debt, or at least the debt path, and the level of deficit. Under normal times, if you had much lower debt and smaller deficits, you probably never would have had the uninversion to begin with. So I'm going to say that this was not an economic uninversion. This was more of a fiscal uninversion, largely driven by a narrative that I agreed with, a narrative that was true, but largely driven by that, and with Doge making the visible progress that it is, and Besant very focused on the 10-year, being that we're inverted again. I'm not going to call it a double inversion. In my mind, I'm thinking this is really just a continuation of where we left off. It's the same inversion. However, history, looking back at this time, will say that was a double inversion. So there we go. But that's in my mind, that's a big deal. I didn't hear too much mentioned about that. I don't know about you, but I didn't hear anything about that. March 19th, FOMC, 17 days away. We get summary of economic projections. The last time they did it, penciled in 2 cuts. The market quickly said, no, we think it's 1. Now, if we look at the bottom of the screen here, they think it's 3. 3 in the next 7 meetings. We have, I think this is the right probability here. No chance of a cut. I think that's correct. A small chance of 25 basis points. I don't see that happening. The two interesting things I would look for out of this one is what are the Fed officials putting in. We do have heightened uncertainty. We're going to take a look at Atlanta Fed GDPNow on the next screen. We do have to think about the jobs report that is coming out in 5 days. Is the downsizing in the U.S. government going to show up there? Is the uncertainty of tariffs, has that affected the pace of hiring from companies? It has in Canada. If you had listened, I listened to Bank of Montreal, TD, and Bank of Nova Scotia's conference calls when they reported earnings. The growth in the loan book is rather slow, and they've all said the same thing, that a lot of their customers are on the sidelines waiting for some resolution to tariffs. So if they're holding back investment with the uncertainty of tariffs, that means they must be holding back employment with the uncertainty of tariffs. So I think you could put a big R for risk on that one for Friday. We're not going to get this for another 17 days, so that's not a risk event yet. ISM manufacturing 1 day, services 3 days. This is going to take on more importance because the S&P the S&P services that came out was in contraction, and it was the services sector that has saved the U.S. economy for 4 years now, and it was in contraction. If ISM, which is the bigger one, the more important one, if this one here shows contraction, you can have an ugly day on the S&P, and duration is going to do quite well. So in your portfolio, you have beta, which is equities, you have duration, which is bonds. I think we're at the point now where if we have weak beta, we are going to have strong duration. That negative correlation should be back in. So I don't know that you'd want to go through 2025, or at least where you are right now, without considering that I think duration is the bigger outperformer. For the last week, it certainly was. TLT up 3.16%, SPX down 0.98%. Small caps, we'll see in a little bit, down about 1.5%. So I would put a R beside ISM services as well. And Tuesday, and we have our guy here. Tuesday we have Canada and Mexico. That is the deadline for tariffs. I'm going to call it as just a threat. I don't think it's going to happen because he did announce it during the week, and that's where we got some big red bars down after starting the day green. It's like, well, what's going on now? And he said, oh yeah, they're in place, they're ready to go, we're just waiting for that day. But the Canadian trade envoy was still there. They hadn't left. If they did leave, there would have been a press release about it. They're still there. So if I were part of that envoy, I would have been saying, okay, these are going to happen then? And if they are, then this meeting is over. What would be the point of us continuing to talk? Later that night, CBC ran a story saying that one of the U.S. representatives was saying incredible progress has been made towards the resolution here. So if they are definitely going to happen, why would you continue to have negotiations? I think this is another Monday morning, get me out of this thing. Trump will, sorry, I said the name, and I said I wouldn't say his name. I'd say that guy from down south, from where I stand. It's kind of like if you're in Ohio and whenever Michigan plays, they never mention the name. It's always that school from up north. You never mention the name. So that guy from down south, because I'm in Canada. Well, I'm in Costa Rica, so I could call it that guy from up north, but you get what I'm saying. So on that one, I got an R on Tuesday morning, but I know it sounds silly. I'm going to make it a small R. I don't think it's a big risk event. I think it's a small. I think the market pretty much expects the same thing that I'm expecting, but we don't know what's going to show up in these numbers. That's going to be a big deal. Let's look at our ZQ, our Fed funds futures, the price term structure, effective federal funds rate 4.33. And I have been asked, how do I get the numbers per quarter? The index is 100 minus R, where R is the effective federal funds rate. So if we were just base it on an index here, we would have 95.67. For April, it's 95.69. Sorry, that should be a 4, which implies 4.31. If the rate is 4.33 and this is 4.31, the market for Q1 has priced in 2 basis points lower. Call it nothing. And then you just keep taking the difference. 4.31, this is 4.065. You just go out 3 months to the next contract and you just take the difference in the implied rate. So you got another 24 basis points, another 25, another 18. We're roughly at almost 3 cuts in the next 7 meetings. What is it? Some 4 weeks ago, 5 weeks ago, the market was pricing in 1 cut over 7 meetings, or I don't think we had the other meetings. Sometime in January it was like 1 cut in 8 meetings, which I didn't think was right. 3 and 7, that would be my base case. I think we get more. ZQ has done quite well. I took some profit on my January ZQ, some profit on my October ZQ, in the expectation that this was a result of all of the uncertainty over the week. And the big jump in ZQ was, a big jump on Friday was Atlanta Fed. And we'll look at the components that are reducing that. Let's look at reverse repo. This is normal at the end of a month. And Friday was the 28th that the facility increases and then it decreases throughout the week. Is March going to be the month where we hit 0? So one of the other things you want to see out of the FOMC in the press conference is what are they going to say about the balance sheet? Because they did have a little paragraph about it, but it wasn't about much. I think there's an opportunity here for the Treasury and the Fed to work together on the 10-year to both get what they want. The Fed has said in the past that they want to be completely out of MBS, but they got like $2 trillion of that stuff. If they're going to wait for rates to come or yields to come down and spreads to contract to be able to sell the MBS at their cost or at a profit, it's going to take a long time. But what they can do is they can sell the MBS now, book a profit, book a loss. It would be booking a loss, but buy the 10-year at a lower price than they would buy it if they waited until it increased. So as the 10-year decreased, they'd make the money back there. General rule in the market is you don't have to make money the same way you lose money. So there could be something here of, sell your MBS, maybe 150 billion a month, and buy the 10-year. That would help the Treasury. That would help Besant. Besant would run back to his to that guy and say, "Listen, he's playing along with us. Can you maybe? Well, I don't think you'd be able to tell that guy what to do, but just hey, he's playing along with us. Oh, by the way, did I tell you how wonderfully great you are? Because you got to do that every sentence. Reverse repo 234, reserves 3.3 trillion. That gives us 1.15 trillion to run off, based on 2.5. But what's more pressing is once reverse repo hits 0, then all declines come right out of reserves right away, and I think 2.5 is where they'd like to end up. Let's see how Atlanta Fed got to negative 1.5 on GDPNow. This was from February 28th, negative 1.5. Shocking. Before the revision, it was sitting at 2.3 all the way down to 1.5. That's a drop of 3.8. X minus M, and we're looking at GDP, it's C plus I plus G plus X minus M. The X minus M component was negative 0.41 at this point in time, dropped to negative 3.7. There are 2 components here, the X and the M. There's been some discussion that it's probably a lot of front running ahead of tariffs, which would make the M bigger, which makes the trade deficit larger. But that front running would end up in one of 2 places. It'll either end up in inventories to try to get your inventories built up ahead of tariffs, which would then show up in I. Or it would be bought by consumers, which would then show up in C, but we have a downgrade from the consumer of 2.3 down to 1.3 without any change in I. So I think this is more along the X component, a decrease in the amount of exports. There has been for some time in a lot of countries a pushback against buying American goods wherever you can and buying local. It does happen. You go into some stores in Canada, there's signs telling you what's Canadian, and there are sometimes just blank shelves with a little 10 card where you would have picked up an American product where a little 10 card says, try Canadian instead. So where there's a clear Canadian substitute, stores are doing it. Where there isn't, well then, you can't completely avoid American goods, but you can do quite a lot. One forecast for travel, for example, because if a Canadian travels to the U.S., that is considered an importation of services, travel services. You're importing it by exporting yourself to the U.S. For the U.S., that's a Canadian export into an export of their destination services to a Canadian. I got it. It's just backwards that way. One estimate is just the change that's happening out of just one province, just Quebec, just avoiding U.S. travel will cost the U.S. $3 billion. Now, $3 billion isn't much, but that is just one province. That's not considering the rest of the world. With what we saw on Friday, and you cannot ignore that because that's an event, right? With what we saw on Friday, this is going to spread to a lot more countries, and I think in the weeks to come and in the months to come, I think commentary will look back on that meeting as the beginning of American isolationism, and not the type of isolationism that they're driving towards getting. They don't want isolationism, but they will end up being isolated. We have some people down here from Europe, and I was mentioning this thing going on in Canada, this grassroots thing where consumers are just united in saying let's minimize the amount of American product and services that we're using. He said same thing in Europe. To the extent that they can, people are doing it, and all without any tariffs yet. Consumers are reducing their demand for American products. So I think part of this drop from negative 4.1 to 3.7, not part, but probably a large enough share, is probably coming from the X component. This drop here from 2.3, from the consumer. Where was the consumer? Oh yeah, 2.3 down to 1.3 is probably the two readings on consumer confidence that we got. University of Michigan on sentiment and the Conference Board on confidence, both of them dropping off. Let's just read and see what we get here. After recent releases from U.S. Bureau of Economic Analysis, the U.S. Census Bureau nowcast of the contribution of net exports to first quarter real GP fell from negative 4.1 to negative 3.7. First quarter personal consumption fell from 2.3 to 1.3. Surprising, I don't see anything on the G. In my inbox on Friday, I get the weekly fact set email. This was the headline in the email: analysts making larger cuts than average to EPS estimates. And I click on these headlines sometimes and I end up being disappointed, because you may find that the average is, well, they cut earnings by 1.1% on average, but now they're cutting by 1.11%. That's larger than average, and you're just left disappointed because it was just intended to get you to click. It's like, but that wasn't the case here. So two charts, I think, sort of tell the story. This is Q1 2025. This is just Q1, and this is changes in EPS from December 31st to February 27th. We start getting Q1 somewhere around the second week of April, right? So as of December 31st to February 27th, how have analysts adjusted earnings? And all the sectors are negative. Look at materials, down 16.2%. The 8.8% consumer discretionary, that's a big one. This here is for the whole year, the calendar year 2025. Again, over that same period of time, only the financials are higher, but there's materials for the whole year, down 9.1%. And consumer discretionary down 1.8%, versus just for the revisions downwards for the quarter, 8.8%. So that's something to pay attention to. We have seen that rather consistently, that over, week after week, the earnings estimate does come down. And it has been coming down, but to have it quantified larger than average for Q1. And I think you can attribute this to a number of reasons. Doge cuts. It's been good for duration, as much as the story has gotten into duration. But every time you fire an employee, you reduce aggregate demand because that employee would spend the money. So you have a reduction in aggregate demand. Not just this year, but next year and the next year and the next year and the next year. So you take $100,000 all-in salary out of an employee, that's $100,000 in aggregate demand gone this year, next year, the year after, the year after, the year after. You also have a percentage of their payroll in forced savings, Social Security, and maybe even some pension contribution that would have gone into the market. That is now gone. So as you reduce the size of the workforce, you also reduce the size of forced savings, and all of that finds its way into financial assets. Every time you fire an employee, you lose both aggregate demand and asset demand, financial asset demand at the same time. The population growth. Illegal immigration does provide population growth, as much as you can disagree with it, and I disagree with it as well. You want to come in legally. I fully agree with that. Otherwise, why have laws? However, when they do come in illegally, they are going to eat food. They are going to buy SIM cards. They are going to live somewhere. They are going to buy clothes. They're going to do some sort of aggregate demand or contribute to some level of aggregate demand. It's not as if they illegally cross the border, head immediately to their job, get their paycheck, and send the whole thing back home. That's just not how it works. Most of the time, the illegal immigrants have precarious employment, and they hang out outside the Home Depot and get whatever they can, but they still must spend money and live in the country. That's gone. At the margins, that's gone. AI early gains. We have 2 people down here that work with code, and they both say the same thing. When the discussion went to AI, it's the same thing, is that it makes me way more productive right away. So I need some code written. I give it to AI. I get my code written. But since I'm an expert, I can read it and say, yep. Oh, let me fix that. Yep. Good. Off you go. So rather than spending 3 hours on getting all of this code, they might spend 20 minutes on checking the code to say, yeah, all that's doing as they trace through everything. Okay, good. Well, that is at the margin reducing the demand for extra people sitting in seats doing some coding. And if you don't hire more people, you don't have increases in aggregate demand. And this is, I think, going to be much bigger than what people think it is the global negative sentiment against U.S. goods and services. So I do see it when I go into the stores in Canada. I mean, I've made some choices myself to the extent that you can. I'm not that invested in making a big protest in the supermarket about it, but where I can, where it's obvious, where I can look at the shelf and say, wow, look, I can grab this one. I know I do it, and I'm not going out of my way. Stores are sometimes going out of their way to demonstrate that you have a choice by either removing the American product or putting them together and pointing out which one's the Canadian so you can recognize that you have a substitute. They are going out of their way to do that. I think that's going to be a bigger thing given what we saw on Friday. The conversation, at least as I scanned the headlines over the weekend, is America is no longer our friend. That seemed to be, what you see coming out of every country. Now, you can agree or disagree with the interpretation of the world, but if somebody feels that you're no longer their friend, they will begin acting as if that is true, thereby making it true whether you agree with it or not. As an investor, we can't ignore that. The sum of all of these things is a big hit to aggregate demand that I would find it challenging thinking that S&P is going to have another 20% year. I think if we're going to have a 20% year, it's going to be in duration. It's going to be in the long end of the curve and not in equities. I have been short small caps. I am, at this point, far more willing to move my short position up to large caps, and it's a conditional statement. So in other words, I am short large cap. There is my investment function equals a function of short large cap, conditional on continued, let's call it continued behavior. Just call it that. So if what we see coming out of the White House, the lecturing other countries on how to behave, embarrassing other people, threatening every country that doesn't immediately bend and kiss the ring, if that continues, then yes, I would definitely be short almost every U.S. equity, almost every U.S. risk asset, but definitely be long treasuries. And the longer the duration, the better. And I would be long ZQ at the same time, because the U.S. cannot go it alone. I've given a lot of thought about this, is what contributes to U.S. economic dominance? Are they really that good, or has the way been cleared for them? Meaning that part of their success is the willingness of other countries to say, okay, we're good with that. And I think that if there is this united front against them, even just at the consumer level, the U.S. is going to hurt. The rest of the world is going to hurt. I mean, if U.S. goes into a recession, the whole globe goes into a recession. Everyone's going to hurt. But the logic is, if you're going to hurt me, I may as well at least try to hurt you. I'm not going to go down. I'm not going to go down without swinging. I think that is being understated and underrated. I don't see enough stories about that, and I'm not sure why Bloomberg hasn't got somebody in the field just doing some field reporting on this and just looking at the impact, talking to some retailers out there and saying, you know, what are you seeing? What percentage would you say? Because I think that's a big deal. Costco, I think, will be interesting. They report on Friday. I'm going to listen to their conference call, because Costco does have, I think, more than any other retailer, the ability to shift locally very quickly, because they carry so few SKUs. Walmart would find it very difficult, just the sheer number of products they carry, but not Costco. So they're very effective at saying, well, we have this product, but we can switch to another product that is more local, and they can switch rather quickly. It'll be interesting to see if anyone brings up that issues of that on the call. What are you seeing in your stores? Are you seeing, demand shifting on product? I don't know if an analyst would ask that, but there's the place where you would hear it. I would love to hear sort of what Costco has to contribute to that discussion. But we have a comment section below this video. Let me know, in the country that you're in, is the conversation around that? Is there something there? Because if we're in the markets, we would like to know that. Large cap derives some 45-50% of their revenue from outside the U.S. Consumer discretionary is probably the most susceptible. Consumer staples, well, there's not much you can do. If you need certain things and it's an American product, you need certain things. But consumer discretionary, the key word is it is discretionary. I can either substitute or I can just put off to some other time. Let me know what you think about that. Okay, SPY, volatile week. And again, every time, the market seemed to be going okay, you had these big red bars down. It was, down here it was a collective, what did he say now? And then everybody went searching for whatever they had. It was sort of a game of who could come up with what he said first. And then Friday, you had a rally, and then a big move into the close. And that one I didn't understand. I looked at that and I thought, why? If anything, I thought there should be some caution still based on what we saw. Let's hear the fallout over the weekend. By the way, I have a clip right after this of the event in the White House, but seen from a different angle. And I don't think that any other camera caught this angle but one. It's seen from a different angle, and we'll have a look at it. Still our all-time high, 6/12/30, February 9th. Where we closed, we're down 3% off of that high. We're now at 22 times a forward multiple on the SPX. 270.29 is the current forecast for first quarter for next 12 months operating earnings, the next 4 quarters. And we closed at 59.54. By the way, a 10% correction off of 612 would put you somewhere just under 550 on SPY. Still 22 is a very rich multiple. So if there is some caution and concern, it's warranted. I believe, given the background that we have, the level of uncertainty that we have, that some pullback is warranted. Uncertainty never makes things better. It's not as if you say in your life, you know what, things have to turn around for me. You know what I'm missing? More uncertainty in my life. That'll make things better. It never does. Uncertainty only makes things worse. So we certainly have uncertainty, and uncertainty comes down to one person. One person now. I think this is right. Implied volatility on SPY stayed elevated even with the rally on Friday. You're still elevated on implied volatility. I think that's the right thing. We should have higher levels of volatility, and I think we're going to have that for a while. So there are investors and there are traders, and the market is going to do this kind of thing. And look at what we've got over here. That's what I think you can expect for the next little while. If you're an investor, you're going to have a good day and a bad day, and a good day, and then the middle of the day it'll be bad. Then the next day it'll be bad, then a good day, then a good day, then the middle of the day it'll be bad, then maybe it'll be good, then it'll be bad, then maybe it'll be good for a while. You get what I'm doing, right? You're looking at your portfolio and you're saying, oh, this is good. You know, an hour later you look at, what the hell happened? It's all gone. Next day, okay, some of it is back. Next day, oh my God, I'm lower again. Now I'm up, now I'm down. A trader loves that. You know, you get volatility, thank you, I'll take that. And it goes down, I'll be buying here, thank you. I'll be selling here, buying here, selling here, buying here. That's how you play volatility. You buy on the way down, you sell on the way up. Investors, oftentimes when they get afraid, they do the opposite. They sell on the way down, and then they watch the market recover, and they chase it on the way up. They buy on the way up. That is a losing proposition. But with this and there's it on TLT, you better learn how to be a trader and how to profit on volatility. In my positions video in the applied level, I said this a couple of weeks ago, that I am having the best start of a year that I've ever had, just because of this volatility. I never want it to end. I want this guy, this guy, you know who I mean, to stay exactly where he is. I was calculating how much runway I have on this volatility. He's 5 weeks in to a 208-week term. 5 weeks out of 208. I know it feels longer. It's like a relationship that's gone on way too long and you're just too tired of it, and somebody said you've only been together 2 months, and you think, no, it's longer than 2 months, isn't it? That's a clear sign that something is wrong. But 5 out of 208, I like that. Implied volatility, last read on SPY 15.4, it did not drop. It increased week over week, and 14.7 on TLT. I would love to see these go higher, because if these go higher, the trader makes more and more and more money, because those premiums get bigger and bigger and bigger. They're just beautiful. IWM 214, down 11.3% from its high. It had the worst week of the three indexes, the SPY, IWM, IJR. IJR very close to SPY, down 1.04% at 111.79, down 11.8%. Look at the gap, by the way. Large caps down 3%, small caps down over 11%, well into correction territory. Are they sort of forecasting, or are they, a canary in the coal mine for large caps? If you did get a correction, I don't know that I would say where'd that come from. I would think, well, given the level of uncertainty we have, until you get past all of this tariff nonsense, it would seem that this is good cover for a correction. But hanging out at 3%. Earnings coming up this week, they don't agree. So I'm, the headline story is when they do agree, then you got to have a parade for that. Some notable ones: Tuesday, AutoZone and Best Buy. Wednesday is Ross Stores and Campbell's. They don't want to be called Campbell's Soup anymore, just Campbell's. Thursday is Kroger. Friday, Costco. That is the one I will be listening to. And you have Broadcom and HBE. Let's look at that clip that I have for you.
I told you I didn't want any shit in Sunnyvale. You idiots have loaded up a hair-trigger double-barrel shit machine gun, and the barrel's pointed straight at your own heads.
So, like the barrel of the gun's bent back?
Let's go, Randy. These boys want to play hardball. We can play hardball, too.
So, yeah, you saw Zelensky there in his traditional black shirt. Looks like he's holding a rum and coke. J.D. Vance, in this one, has no shirt on. But in his defense, he is a self-proclaimed hillbilly, so that sort of makes sense. When I saw the clip on Friday, I thought to myself, you know, in my head, I'm thinking, this is some real trailer park diplomacy. So anybody who is Canadian and who's cool to any degree at all will recognize this as part of our deep Canadian culture. This is from the series Trailer Park Boys, which is probably one of the best cultural pieces of work that Canada has ever produced. Maybe some of our American friends might recognize Bubbles in the background there. He didn't know that, but he was at the event. Anyways, let's update you on Discord. Look at the bottom of the screen here for our Discord server. 1,173 people in. We're on day 9 of getting people in. It is easy. You simply just go to the site and navigate towards any video in the applied level. If you're an applied level subscriber, on the right side of your screen, you'll see a thing that says Join Discord Now. A word of warning here: do it from a desktop, because on certain mobile devices, when you click on it, a little window opens up on your mobile device. It gives you instructions on how to do it. You scroll down and you cannot see the link. So you think, well, I'll just do it when I get home. But you can only do it once. Every subscriber has one specific link just for them. It's a one-use link. If you give it away, you're not in Discord. And then we can't match up your username with that username, so then it's just wasted. So if you do it from your mobile device, it's not going to work. You'll say, well, I'll do it at home when I get to a desktop. By the time you get home, the link is expired, and then you have to contact us and say, look, my link is expired. Do it from a desktop when you start, and you'll have no issue in getting on to our Discord server. We've got about 3 or 4 more weeks, because we still have a whole bunch of applied level subscribers that have not clicked on Discord. Not 100% will be interested. I get that. But I'm going to encourage you to get interested. Just have a look at some of the channels we have here. We have, when you first join, you'll be in the applied level general. You can't see anything from there until we get you out of there. We have one person waiting in general right now to be assigned a role. How it works is, once you show up there, we figure out who you are. We check your permissions on markmeldrum.com, and then we assign you a role. If you have no permissions on markmeldrum.com, then you shouldn't be there. We kick you out. We've only had to kick out 2 people so far that I don't know how they showed up there, but they got there, but we kicked them out. Under applied analysis, you have the investment ideas. That one has gotten full of really good conversation. Under applied asset management, both trade ideas and positions, the conversation that is going on there. I'd say of all the forums out there for finance and people talking about ideas, we probably have the highest concentration of charter holders engaged in the conversation, and you'll be able to spot them. They have a diamond beside their name. So if you're just looking at what do the charter holders have to say, you could scan down and just look for the diamonds. But the conversation, when you look at YouTube comments and you go here, night and day, I don't spend a lot of time on YouTube videos, even other finance shows, reading their comments. You read a few, you go, okay, there's nothing here. But these, I read them all. Some of them are so good. With a lot of good supporting facts and even some good links and some good documents. If you're a member of the applied level and you're just relying on the videos I put up, you're missing a lot. This is huge, and I think it's only going to get a hell of a lot better. For those of you on YouTube, I will be getting to you in about 4 to 5 weeks. I just got to get the applied level subscribers in. But you won't be able to go past this, the market outlook. And the market outlook will be posted on YouTube and linked into Discord. So you can actually watch it from Discord and engage in the conversation at the same time. So there'll be a way for you to get over to here, but you won't be able to see the other conversations. You'll just be in the market outlook. But it'll be 4 to 5 weeks before I get to you. In the meantime, if you want to figure out, well, how will it happen when you open it up for that, go to markmeldrum.com. Open a free account. I'm going to say that word again, free. Just in case you think I'm trying to sell you something, I am not. It's free. What I am pushing on you is the level 1 CFA from 2018. It's all there for free. I want you to go through it. I want you to learn that stuff so that you are aware of at least what the level 1 standard would be for what you need to know in the market. It's free. I'm giving it to you. When you're there, when we're ready to bring you into the Discord server, at that time, the link will just show up on the side of the screen. You just click it and in you come. But I won't put a link out in public for everyone just to click on. You will have to have a free account on markmeldrum.com and then just click on that link. Nobody's going to sell you anything. It's there for your own benefit, and that's the only way we can get you on, knowing that it's one person per link. That's the way we have to do it. So you can start to get ready for that. If you are an applied level subscriber, you already have access to Discord. Please use it. You're missing a lot. I've already done, I think, 2 or 3 live feeds from Discord. And the market opens at 5 p.m. Costa Rica time tonight. I say the market, Globex futures, which is 6 o'clock New York time. So I'm thinking that I'm going to be in one of the channels tonight for some conversation on the Discord server. And in case you missed it, I guess there was an announcement from Trump a little while ago. There, I said his name. I said I wouldn't say his name. I'd call him that guy from up north. That guy posted something about the types of cryptos that are now being held, and Bitcoin jumped on that news. Jumped. So it's going to be an interesting open, I think, at tomorrow morning when we start looking at the crypto-related names, especially Coinbase, because that thing got beaten up, I think, unfairly. Never would have happened under my watch. Never, but it's been a disaster. We're going to fix it. We're going to make Coinbase great again. Again, never would have happened if I were CEO. But we're going to take care of it. Anyways, that's it. Just the final push here. If you're not on Discord, if you have applied level subscription, you are missing a lot, and it's only going to get better. I am over the moon at the level of the conversation that we have going on there, and some of the ideas that are being thrown around. I mean, I read some and I thought, oh, that's interesting. I better make a note of that. That's kind of neat. And then just the crowdsourcing of the ideas. Information you're getting about something that something I said in my positions video, information that I didn't even know existed. I'm looking at it going, okay, that's interesting. I didn't see that either. I am thoroughly impressed with this. So you're missing out, man. Anyways, that's it for the week. I will see you next week.